Okay, good afternoon, everyone. Again, welcome to the year-end IPO event of CloudArchVentures. So thank you for taking the time to join us today. I hope you guys are just as excited as I am to hear from our esteemed panel of speakers who have pursued the IPO route and ultimately succeeded. But before that, I want to thank our partners for helping us spread the reach of our event and sharing our desire to shed light on the IPO route. So that is COL Financial, the Entrepreneurs Organization, Anvil, Asian Institute of Management, Kubo, and Startup Village. Okay, so now before we begin the event, I'd also like to remind everyone about a few house rules. Okay, so our first house rule is please try to keep your cameras on throughout the event. We want to see the faces of all of our participants and everyone who is attending our Zoom session today. Next, please mute yourselves for the duration of the event. Third, only ask relevant and appropriate questions. And lastly, please respect the views and opinions of everyone in the room. A gentle reminder that this event will be recorded and live streamed on CloudArch social media pages. So if there's something you guys missed or something you guys want to look back to, you can find us on CloudArchVentures on Facebook and you can rewatch this event. Okay. So now it is my pleasure to introduce one of our own analysts, Enrique Tan, to give a brief introduction of our company and a general overview of the IPO route. Enrique, floor is yours.
Thanks so much for that, BJ. Is everything clear on my end? All right. So
loud and clear.
Yeah. Good afternoon, everyone. My name is Enrique. So today, I don't want to take up too much of your time. I'm sure that a lot of you, including myself, are very much interested to hear from our distinguished panel in a short while. But if you could please just lend me your ears for a quick 10 minutes, I promise. I just want to lay down the foundation and paint a better picture for you all as to where we as the Philippines stand amongst our peers in terms of our capital markets, progression, and IPOs, along with why we've chosen to dedicate ourselves as a company towards this cause. So please allow me to show you a quick overview of the Philippine IPO landscape compared to Southeast Asia to better put things into perspective. There we go. All right, so I'm going to give you all a second to take a look at these statistics. All right, so the total trading IPOs of the entire Southeast Asia grew by 171% year on year, which is a total of around 95 listings. So I want you to just take a good guess as to how many of those 95 listings came from the Philippines. All right, and the answer to that is 3. That's just 3 of the entire 95 listings. Now, please don't forget that these statistics are only composed of 6 different countries. And you might be thinking, but look at Vietnam, for example. They had 0 listings in 2020. So we're not doing the worst, right? Well, don't be fooled. Yes, they had 0 listings in 2020. But take a look at how many companies were already listed in their stock exchange in 2019. They had 737 listed companies. Take a look at the Philippines. In 2001, we had 230 listed companies. And at the start of 2020, just this year, an entire 20 years later, we have 274. We've only grown by 19% in the last 20 years, right? We're lagging behind this entire Southeast Asia by a mile. It's no secret. We're dead last. But please don't think of this as a disadvantage. I don't want you to look at the Philippine stock market and say that there's very little opportunity here or that it's going to be too difficult to get the Philippine landscape on par with its peers. In fact, I see this in the opposite way. Because we're so small, because we're so behind, we have so much room for growth, so much potential, and more importantly, so much opportunity for all of us to benefit from. And there are so many companies here that are set up, whether it's a mature company, a high growth company, or even a startup company. Listing a company into the market not only benefits that company undergoing an IPO by raising capital, it also benefits the players in the stock market as it gives them more opportunity and more choices to trade. It benefits the country altogether. New companies may attract foreign investors to put their money into our market, and there will also be more money coming in the country, which will help the entire economy as a whole, right? So now, why are we so adamant on IPOs? Why does CloudArch keep striving to help spread this advocacy, right? I don't know if you've noticed, but in the last couple of months, there has been extra attention and focus coming into the IPO side. There's a lot more people giving talks about it. Um, and I personally think that it's been in the best spot that it's ever been. And that's because there's never been an easier time to go public and list than today, right? There have been rule changes over the recent years, which has made this whole process a lot simpler than what it used to be. And I've listed the most notable ones here on this slide in front of you. So first off, for minimum capitalization, you needed to have an authorized capital stock of 100 million pesos or more, of which 25% must be subscribed and fully paid. Today, you would only need to have a paid up capital of at least 25 million pesos. Second, for profit and valuation, you would have previously needed to fulfill both requirements of having a cumulative EBITDA of at least 15 million pesos for the last 3 years, and also a positive EBITDA in 2 out of the last 3 prior years. Whereas now, you would only need to fulfill one of the following rules. So the first condition would be the same. You need to have a cumulative EBITDA of at least 15 million pesos for the last 3 prior years prior to the application, or have cumulative net sales, which is also known as your operating revenues, of at least 150 million pesos for 3 fiscal years with an average net sale growth rate of at least 20% over the last 2 fiscal years. Third, operating history. You need to have an operating history of at least 3 years, whereas now it's trimmed down to 2 years. And finally, and arguably one of the biggest ones, in my opinion, is that the IPO taxes are now waived under the Bayanihan 2 law because, let's be honest, nobody likes paying taxes, right? And all these reasons combined are what truly pushed us and motivated us to create this company. These are the reasons we set up this event. These are the reasons we religiously spread this information. And these are the reasons we will continue to do so moving forward. So just to give you a little bit of background of who we are, CloudArch is a company built by the founders of COL Financial, CTS Global Equity Group, and Kalum Trading Institute, because they believe that the Philippines is more than capable of having a capital market just as abundant as any other around the world. These 3 companies are continuously working with the international markets like Japan, Hong Kong, the US, because they research, trade, follow news on them, which also means that they see what's happening. They're familiar, up to date with the latest developments, the changes that have been going on in these markets in the last few decades. And because of this, they realize how far behind the Philippines was and is until today. And that's when they finally decided that, it was finally time to do something about it. And it's time we make a genuine change in the market. Because there's more than enough money circulating our market to kickstart in the economy and to continue to develop it further. That's no secret. And the reason why this hasn't happened yet is, one, either not enough people take advantage of the opportunity. 2, some people are just simply not aware that the opportunity exists. Or 3, others just don't know where to start. And that's where we come in, right? Everyone will need a bit of guidance. Everyone will need a bit of help. Everyone has to start somewhere, just as we did. And if you are one of those people right now, then let me explain to you the ways in which we can help you should you need it, right? First off would be capital structuring. The ultimate goal for most businesses at the end of the day is still profit maximization. We can help you fully optimize all aspects of capital structuring in order to eliminate any form of unnecessary losses or profit leakage. Next, IPO advisory, of course. We are fully equipped with specialists from the legal, technological, and financial sectors to help you in every way we possibly can throughout your full IPO journey. And last but not least, if your company is performing, going strong, headed in the right direction, we're even willing to put our money where our mouths are and become an anchor investor in your company. So allow me to just give you a quick overview of what our general partnership timeline looks like. Just a rough guideline. So first will be the engagement, right? We assess the partnership viability along with an NDA. Then we move on to the due diligence on our end, followed by the kickoff along with the investment bank, legal counsels, and auditor to prepare your company. Then the IPO preparation, which is to finalize additional documents needed, such as your prospectus, SEC registration, and PSE listing application, until we finally get to the big IPO day. And as I was previously mentioning, the anchor investment. Now, unfortunately, we don't have too much time to go through these in detail, but don't worry if you have any questions, concerns, please feel free to contact me or anyone from the CloudArch team that BJ mentioned previously, and we'll be more than happy to assist all of you. And lastly, you're probably thinking, just because it's easy to list today, or just because the Philippines is lagging behind, doesn't mean that it's actually beneficial for my company to list, right? Well, to be honest with you, it most likely is. Please don't get me wrong, okay? I'm not here to try and convince you that an IPO is the perfect end goal for all the companies out there, right? Conducting an IPO would be much more beneficial for some companies, and it simply wouldn't make any sense for others. Although in most cases, and most probably including yourselves, it will be. And let me explain to you the pros and cons of undergoing an IPO and why you should aspire to get listed, if not today, then in the near future. Okay, so I'm just going to quickly breeze over these, the advantages and disadvantages of an IPO. So let's just kick off with the advantages to start. First, you raise a lot of capital. Enough said. You can use the money for whatever you believe is best for your company, whether it's to expand the business or use it to pay off debt. Second, this ties in with having a reduced cost of capital. So as the company owner, you have the choice to raise additional funds if needed after an IPO through a follow-on offering, also known as an FOO. Third, it's free publicity, right? As soon as you get approval from the SEC to be listed, people will take their own time to get to know your brand, your product, your company, even you, right? Without really having to do any additional marketing. And this will also give you the opportunity to build your credibility amongst the market alongside with your publicity. So making ethically good or economically smart decisions will help work in your favor if you're meeting new people, right? Trying to expand your business, need support from others. Fourth, secured legacy. So should the time come wherein someone else will need to take ownership of your company, whether it be your child or business partner or whoever is planned for succession, you can still enforce your original plan or direction that you want your company to go towards, right? The person who takes over will still have to listen and follow the orchestration that the original owner, or which might be you, has set up. Moving on to the disadvantages. So the process is time consuming. I'm not going to hide that, but I can't give you a specific time frame for that because it will really differ from company to company depending on how quickly you move. Yeah, there are a lot of requirements and documents you will need to pass before you are eligible to list. Although on the bright side, it's a one-time setup. So after you finish all the work you need to list, you won't have to do this anymore in the future. Next, there are additional regulatory requirements you'll have to meet and maintain. The IPO listing rules that I mentioned in one of the previous slides is separate. It's a separate requirement to the regulatory rules. It's mostly legal issues, but we can get to that in another time if you're interested. And lastly, financial transparency. This is a big one. So all your figures will be open to the public. Every single cent will have to be recorded and declared. And as you should already be doing, you will need to pay your taxes religiously, of course. But this, in my opinion, is both an advantage and a disadvantage. So the advantage would be what I had just mentioned, and of course, it may be a little bit more tedious. But the advantage that a lot of people don't really foresee is the peace of mind that you get alongside with it. Right? There's nothing to hide. Everyone can see what you're doing, how much the company is making, where it's coming from. So no one will really question the legitimacy of what you do any longer. So thank you, everyone. That about wraps up my segment. Thank you for listening, and I hope I was able to set a better scene for you all on the topic of IPOs.
Okay, thank you, Enrique, for that wonderful introduction. And thanks for getting everyone on the same page regarding the IPO landscape of the Philippines and sort of the baseline requirements that a company would need for them to go public. Okay, so I'd like to remind everyone that the Zoom chat box is open for questions, but we cannot guarantee that all questions will be answered. So remember to direct these questions to either me or to Ira Peña. Okay, so now it is my pleasure to start off with Sir Edward Lee, who is the founder and chairman of COL Financial Philippines, COL Securities Hong Kong, CTS Global Equity Group, and the Kalum Trading Institute. Mr. Lee previously served as one of the governors of the PSE and was the chairman of the Computerization Committee of the Manila Stock Exchange. Let's give him a warm welcome on stage, or actually on camera, as he talks about his experience as an entrepreneur and his journey taking the company he started public. And facilitating this segment is the CloudArchVentures CEO, Sir Edmund Lee. Edmund, the floor is yours.
Thank you, BJ. Thank you, Enrique. Once again, good afternoon, everyone. And we really appreciate everyone's support who came here this afternoon. So we're super excited for the rest of the program. And so without further ado, good afternoon, Chairman. Good for you to be here.
Thank you. Thank you for inviting me. Yes.
Well, you don't much have a choice. Maybe you can share your story first before we talk about going public. I mean, a lot of people don't know that once you graduated from college or you dropped out of college, I mean, you set up a wallpaper, blind system furniture business. Maybe you can share to everybody first how that began.
Well, the thing is that I was at a very young age, I was exposed to the stock market. I think I was 18 years old. And somebody introduced me to the market already. And most of my time in college days, I was just really, speculating, investing and speculating in the market. Until in 1983, I was very fortunate to be able to buy 15% of a company in Manila Stock Exchange. And in 1986, when the revolution came, I was able to take over the company and then change the name to City Securities, which today we changed it also to CTS Global Equity Group. So I've always been a market timer. I've always been an active trader. And then, of course, as we start as an investor, then because we're young, we became a speculator. And eventually we became what we call the market promoter. And then from there, because your asset, your invested capital becomes big, then you become decided to buy values and became a corporate director and eventually became an issuer. So I went to the whole journey from what I'm saying, investor, speculator, market operator, or market promoter, and then director. I also experienced what we call a corporate takeover, and then eventually I have to be an issuer because it's really very difficult to be a major shareholders or a minority major. We call it the single biggest shareholder, but then since you don't control the company, then you really don't have any voice at all. But without that experience, being a corporate director for 2 years, without that experience, I would never have decided to be an issuer. I see the importance of being an issuer.
So, I mean, that was a long process. I mean, you've gone through so much in those maybe 15, 20 years, especially during those early times. Maybe walk us through. I mean, it's very difficult, especially the older generation. I mean, to think now, hey, I want to go public. I mean, I think about going, that public route, right? Usually in my older generation, they always say, hey, we have to keep ourselves private, small. I mean, let's make money, but do it quietly type of thinking. So what motivated you? Or, I mean, you shared that experience, but what really pushed you over the edge to Like, let's get ourselves listed back in 2006?
Well, because of that experience, being a major shareholder, or well, in a way, single major shareholder, it opened my eyes that there are a lot of potential, which I think was narrated by Enrique. And one of the reasons why I really wanted to be an issuer is because we created CitiSec Online, which is an offshoot of Citi Securities. And since my background was, I had some operational background of computerization. I used to work for a major computers company, and I was in charge of operations. And I also helped in the development of the Manila Stock Exchange, the Philippine Stock Exchange computerization. So I was very fortunate to have a team of people, IT people, who basically was able to really help me put it all together. You know? And mind you, is that the reason why we wanted to get listed was because I think that's the only time that you will now be able to structure your businesses and use the IPO as a way of being able to get known, or what you guys call it, publicity and credibility, build credibility. You know? Because if you're not listed, you won't be able to build overnight. You won't be able to, people know your product, know what you're doing. So it was really it was not really, and part of this also was because we believe at that time, we really believed that in order for us to be able to help build the capital market, you need an online broker, self-directed, to be able to see it through. You know, I'm really very fortunate that during that time we're considered as a startup, and because of my experiences I was a governor and I was in charge of the computerization. I was allowed as a startup to list CitiSec Online, which is now COL Financial. Very fortunate because the people from the exchange knows me very well. No? And it considered as a startup because it was 200. I had only 272 customers in January 2006 before we were able to get listed. And because they know us, so of course, then it's much easier for us to be able to apply for it because they know that we were always very upfront. But the most important is to build a business when you get listed. You know, it puts everybody, all the stakeholders, all your people, you know, we'll all do all our best because we're now being watched by your listed company, being watched all over the world. Indirectly, all the fan badges are looking at you. You need to really perform, right? Because if you don't, I mean, it's really so embarrassing if we're not able to build a business. We get listed and then we don't perform. So it's always you really need to be able to, like I said, if you ever want to believe that your business is you're building a business not to sell, but really build business to last, I think you need to force yourself to get listed. Very important. It's really very important.
I guess you talk about professionalizing the business. I mean, going through this entire process of going IPO. And then you talked about, for example, retaining talent. Everybody's sharing that same vision, same mission. What's so different about it versus keeping yourselves private? I mean, in your opinion? I mean, because there are some companies that, since I've been around, like, we might lose flexibility, right? We might lose that nimbleness to change. Why don't I just do it by myself, right? But for you, it's keeping everybody on board with your mission and vision, and then everybody buying it into that role.
I think because if it stays private, then there's a lot of excuse, right? When you're doing well, you can be complacent, right? So and then it will probably take longer to be able to build the business the right way. So by forcing yourself to get listed, automatically you overnight you need to start putting all the heads together, all the people together, and try to see how you can do it properly, right? Because the biggest problem always when it's private is that you would tend to relax, complacent when you're doing well, right? And then the biggest challenge is how do you now bring it to the next level? Right? How do you also empower your children to take over that business? Because you have to remember, when you're doing well, and there is really no purpose of being accountable for for the next generation, right? So I think because I've seen a lot of companies, big companies during the 70s, the 80s, and basically even in the 90s, most of them after a while, because of not being listed, when the patriarch pass away, then everything just basically goes haywire. So listing is, for me, very, very important. No, very structured, accountability is there, and I hope and really believe that once the rules are now very, very simplified for everybody to do the same thing. And I really believe that when more companies get listed, the capital market will just grow automatically. It will just grow out exponentially.
I guess on your point about accountability, I mean, now you have more responsibility, not just to your employees, but now you have additional shareholders and, obviously to the customers. Has it changed prior to going public versus being public? Or, I mean, what's the ranking of importance for your employee, customer, shareholder? How would you rank which is more important?
Well, for me, I've been in business for 43 years, right? Still today, I still have my old original businesses, right? The wall covering, the floor covering, the window covering. And the reason for that is because I was able to prioritize my people. I was able to empower people. So for me, my people is the most important. No? You build a good relationship with them, and they will help you bring yourself to the next level, right? So my prioritize, of course, is always our people. You have to have that strong relationship with your people. The second one, of course, is that once you're able to empower your people, then automatically you have to also provide a good product and a good service to your customers, right? You have to do whatever your best. And then last, of course, is that the last priority is, of course, your investor. But it's very important also that when you do well, you need to provide 10-20%. I always use the rule of 20-20-60. 20% paid to management, 20% to shareholders, and 60% reinvested, so that you can benefit what I always call the power of compounding, because you need that to be reinvested so that your company will grow, right? But you need to provide also for your investors, because if you don't provide that cash dividend, I mean, why would they stay with you, right? I mean, so I've been building business for the last 43 years, and that has always been my policy. No. That's every member policy. So whether private or public, you need to provide, number one, is that you need to focus on your people. That's the most important. Second, you have to be customer centric, wherein you have to provide a good product, a good service, even though maybe you're a little bit expensive, but you need to have that quality, quality service and quality product. And then the last, of course, is you have to pay the people who invested in you, who believe in you, right? You need to pay them something, right? So that they can hold on to your growth, because you're paying them a dividend. So automatically, or they can stay with you, because if you don't pay them a dividend, what will happen to them? They can always move to another company, right?
Yeah. I just want to shift this topic a little bit. Maybe we can talk about the PSE landscape and basically some issues with some companies that have that hesitancy to go public. Okay. I'll probably start off. I mean, there's some companies that are liquid. I mean, their business, make cash flow, doing well. And then now they don't need that cash, right? Well, what would you tell to some of these companies why would they should get listed in the first place?
The problem is that if you're a private company, you start doing well, then you have to be very careful also, because the commingling of businesses is commingling between personal and corporate is there. While if you're listed, automatically this conflict will be separated already. There's no commingle of personal and also the corporation. When you get listed also is that you will now be able to create an R&D to look for new products, right? To grow, right? Because if it's your own personal, you probably will just spend it, right? And buy maybe your Ferrari or Lamborghini, or buy a beautiful house, expensive house, or buy, so these are things that are very important. These are things that are very important. The commingling. When you're private, you can commingle, right? But we always discourage commingling. Even if you own 100% of the company and it's private, you really need to separate between what is personal and what is for the corporation. Because I've seen a lot of companies, basically, because of the commingling, they think that they have a good cash flow. They start buying their own personal things, and eventually, when the crisis comes, then they're looking for some cash, and they don't have it. Then they will go down, resort to borrowing, a lot of borrowings. So these are very important. From the very onset, you need to understand where you're going, right? You draw yourself a roadmap already.
So I guess, I mean, one of the point that you made is that at least during the difficult times, right? I mean, you have that war chest, you have that cash in emergency. For example, like there's some uncertainty that happens, for example, like the pandemic, and you're not prepared, and all of a sudden your business might change overnight and you're not ready for it, right?
That's right. That's right.
Okay.
That's very important, because a lot of small and medium enterprise after this pandemic, really, it was a very big challenge for them. It was a very big challenge for them. So you need to really always be aware that managing risk management is very important, especially in our business, right? In our business. And I remember, like, for example, when the crisis came, we lost a lot of business from our fit out businesses. And then they were asking me, do we lay off workers? I said, no. I mean, the priority is, even though, because we have enough war chest that meaning we have saved a lot of money from before, right? And then we're able now to continue to just provide for our people. So that's why I was sharing a while ago, is that the most important really is the relationship with your people. Because if they know that you're taking good care of them, good and bad times, they will stay with you, right?
Yeah.
Especially now when it's recovering, and then you need them more than anything else, right?
The PSC has made a huge push this year, I'd like to think, especially since Create Law and Bayanihan Act came about, to actually invite more companies to go public. I think EG showed that chart, a while ago, right? And in fact, we're actually seeing more companies today, especially smaller ones. I mean, we've heard that there's so many in the pipeline now with the PSC, they're so busy.
Yes.
Maybe you can share your thoughts also for the general public and the investing public. I mean, the good and the bad, or maybe just the good.
Well, it's all about expectation. No? It's really all about expectation. I think what the PSC is doing today is very, very important for the development of the capital market. The team of POW, we visited them the other day. The PSC, basically, we believe that they are very important, in trying to help the small and medium and encourage them to get themselves listed and how to do it really properly. The expectation is that from the investors' point of view, who are participating in all these what we call young growth companies, right? SMEs are considered as young or high growth companies, depending on what industry you're going to, is that the investor has to understand that it would also take a long while. Maybe because they're thinking that maybe they can make money 20-30% on IPO date or whatever. I really beg to disagree. I really think that they have to have a checklist of the companies that they want to participate, and believing that that young growth company that is raising money to build it to the next level is really there for them. It will take a while, because building businesses takes a while. It's not that overnight you can make a lot of money, right? So as far as our investors is concerned, we really need to they have to have a checklist of why they like this company and why they like the principles in itself, and is there opportunity, is there growth potential, and this is the reason why they're listing. And also the same reasons was like why CloudArch is here in the first place, helping identify, right, companies that can be streamlined and needed cash to build it to the next level. So that it's not really just building a business for sale, right? But really just to help them build a business, and so that they can last for generations. And that's where the investors, the early investors, can just hold on to the company and get their 10, 20, 30 baggers. That's the reason why you want to be in a small startup or a young growth company, so that you can get your 10 bagger, right? That's the reason why but then overnight getting a 10 bagger, well, it's very rare that you will be able to see those things. Mm-hmm. It takes a while. It takes a while.
You mentioned about, you have some of these young companies, right? There's a I'd like to categorize them into two buckets, right? There's that first bucket where they're unprofitable, but revenues are growing and mostly taking about market share. And the second bucket is about companies that are profitable at the same time, right? You mentioned that there's more risk, more reward, but obviously that entails more risk. Is this something that concerns you, or obviously it should still be good for the market because it's still a buyer's beware? I mean, education na lang, bahala na sila.
Yes, I've always been, even in any of my talks, I've always talk about it's not protection, it is really education. No? That's why we have a checklist, right? From a startup, young, the investors have to really understand what they're getting into, right? Because there are a lot of companies there, puro kwento lang. That's all storytelling, but there's really nothing. So very important that they understand the people who are involved in that business, that the principals itself, and then they have to also learn how to qualify the business. If there's really growth potential, are they going to really be able to, once they reach an economies of scale, they can bring down their costs and the business can really grow. So these are very important. It's really education. It's all there, right? By the way, right? We've been doing this. We've been going around for the last, 10, 15 years, educating people. It's just that people normally just have their own biases, right? Because buying a startup company, buy a young growth company, it's always expensive, right? It's not cheap. It's always expensive because like us, for example, when I was listing, nobody participated in our company in CON because it was expensive, right? It was not making money. It was just at 270 customers, right? So it takes a long while, right? I mean, it took us more than 16 years to be where we are today, right? So it's really a challenge for investors to hold on to a particular, let's say, company and then see it through. It's very difficult because, let's say, for example, if you double your money, triple your money, you probably will be selling already, right? Rather than being able to see it through, right? I mean, let's say, for example, they bought Amazon in early 2000. I mean, it went down to $10 and now it's $3,000. Would you be able to hold it? I mean, I doubt it, right? I mean, I really doubt it. No. So unless you understand and invest, meaning you can see the principle, you can see the product itself, and you can see the future in the next 5, 20, 30 years, and then you'll be able to hold on to it. That's very rare, but it's really possible. No? Some people are making those kind of 10, 20, 30, $50. No?
I mean, so just to summarize maybe some things that you just talked about. Let's say a company meets all the minimum requirements for listing, right? And you think that they have a solid product and what they lack is scale. Is that what you're saying? That that would be the perfect timing for you as a business for you to make that jump into going public?
Yes, that's very important. It's all about going to the mainstream, right? Using the being listed, using the word being you're a public company, so that automatically it's like there is a what they call parang you're a pedigree. Indirectly, there's a pedigree already going in, right? And that will use the exchange, use the being listed to build your business. It's very important, really very important, especially if you're a consumer type of business that require all this kind of. Of course, if you don't perform well and they lose money, they probably will not patronize your product. Also, there are pros and cons, really. There are really a lot of pros and cons.
And I mean, you talked about some of those cons. I mean, there's some companies that are afraid, right? Parang in their mind, we're still very traditional. We're brick and mortar. It's not just in terms of consumer product, but even sometimes like valuations. Would the market give me a good valuation? Parang it's too small. In this regard, would you like discourage that company to go public, or I'm just curious now.
I have talked to a lot of especially the small and medium real estate companies, and I've always told them to just focus on their business, because if they don't focus on their business and they basically continue to just borrow money or do corporate buybacks, it doesn't make sense, really. What they should be, because sometimes let's say as the owners of the business, And you can feel that, you're making so much money, and then still people don't appreciate it. I was telling them, don't worry about it. Don't worry about it. Just focus on your business. Continue to just build it, and then do a lot of dividend it out, and eventually people will see it and people will appreciate it. Don't worry too much about it. I think it's really sometimes you feel that your company is so cheap that you want to do buybacks, you want to do all these things, you probably, borrow money just to buy back your shares. I mean, it doesn't really or pay dividends. It doesn't really make sense. I think what is the most, you're just indirectly, you're just fooling yourself, because you expect your people to, investors to really just being able to see what you see, right? I mean, that's really the sad part. And then you try to influence the share price so that you can probably get a better, right? Just to see some betters to make you happy that your valuations have gone up so much. But in reality, you're just fooling yourself, right?
Yeah.
So these are the challenges of most people. I really believe that you need to use the exchange, getting listed, to build your business and focus on that, and provide for the stakeholders, the people that, can you imagine if we list 700 or 1,000 companies already today? I mean, the supply chain will benefit, your stakeholders, your people, your workers, employees, all overnight. The capital market will just grow by itself, right? And mind you, don't worry too much about the speculators, because the speculators eventually will learn also, right, to select the best companies. Because if most especially young people who just love to speculate in the stock market, they only want to participate when the market is going up, the issues are going up, and then they want to participate. But in reality, they will just lose money, right? What is really important is selecting the best companies, using your checklist, and believing in their growth story. And then from there, benefit from what we call the dividends that they're being paid out, and let those companies work for you. I mean, has always been what I've been teaching, right? Takes a while, really, for people to understand that.
You talked about building companies, and there's something that we always talk about. Some companies build to last, while some companies build to sell. And even in the IPO, I mean, we've seen it in the US, where some companies are just pushing themselves, getting public money or private equity money. And then pagdating ng IPO, SPAC, for example, like some of these large tech behemoths in the US, right? They're all trying to sell out and scale out. Obviously, I don't think that's what you want. Correct me if I'm wrong. Maybe you could share like insight about these two types of routes that are happening right now.
I think our role is COL is really to educate the public to identify companies that are building to last rather than building to sell. And it's the same thing with when we were being discussed in discussion with your team, is that you also have to look for companies, young companies, that are building to go to the next level rather than to exit it, right? I mean, that's why we're talking about not even entertaining if you are listing just to be able to get your money, right?
Yes.
Yeah. Second, puro primary, we have to be focused on helping the small and medium build their business, raise their capital to go to the next level, so that our customers, the investing public can benefit, right, from all this, rather than the original shareholders cashing out. So that's why it's very, very important that we, as also members of the exchange, has to understand that we really need to educate the investing public, that to focus on companies that are building it to the next level, building to last, rather than building to just basically list it and then just give it to the investing public. They really need to understand it. So it's all about education, not protection.
Okay, so you guys heard that, huh? I mean, we're helping companies that are built that pati kayo, maipit din kayo. It's not just the ones that are trying to get out and sell out as well. Okay, I think that's I mean, we talked a lot of stuff on the PSE IPO landscape. Maybe let's just talk about other things that some people might encounter, especially when they're listed and now people see you. Personal question, maybe. I mean, do you ever feel pressure to perform and succeed with what you already have done?
I always believe that as long as are doing our best, right? Are doing our best, and we are doing what is right for our company and for the industry itself. We might encounter challenges, especially us, for example, as we grow our customers base. We'll have probably problems in terms of our IT. A lot of people are commenting that we should have a better platform. They just don't understand that it takes a while really to be able to do what we do. Because, like, for example, the challenges is always there. That's why I believe in what we call a controlled growth. It's a control that you have to control. It's organically, you have to control your growth. You cannot just fast track these things, because if you fast track, then your costs goes up, and automatically, unless I'm just fast tracking to get out, it doesn't make sense, right? So it takes a while really to be able to build a business that will last. It's a lot of challenges. There's really a lot of challenges, and then of course, as you become number one in the industry, then because people can see you, so they thought that it's so easy to be number one. I mean, the reason why we're number one is because they don't understand it was more than 20 years of slowly building the business, right? And it's continuously challenging as we grow. Automatically, there are a lot of challenges, especially in an environment like ours, wherein GDP per capita is still very low, right? Then, of course, the volatility of the market in itself, right? So a lot of challenges, really, because they say, like, we have a pandemic. Now we have a policy, interest rate policy coming out of, let's say, in the US, right? So the stock market is always the most challenging because there's just too many moving parts, and not only limited to the Philippines, but also to the neighboring countries, and also to in the global environment, right? So it is really a never-ending learning, no, challenges that especially from our industry itself.
Yeah, I mean, challenges are, I mean, everyday part of business. I mean, sometimes you don't know if you're going to be number one. Maybe next year you're not. I mean, I assume you don't. I mean, syempre, kahit paano, we take things a little personal, right? But I mean, at the end of the day, I mean, whatever happens, happens, I assume, especially with regards to where you are, diba?
I really think that as long as we're doing our best and making sure that we can control our costs, so that anytime there is volatility in
the
our
cyclicality
country,
of the business, you mean?
yes, it's in itself. Yes, so kailangan you need to have that cash flow, just or cash that waiting for volatility to happen, and you're able to survive it during, especially in a developing country. You will always have challenges. You will always have challenges.
In your 30 to 40 years worth of experience of doing business, what do you think has changed the most in how you do your business? I mean, is there something different how you started versus how you're doing it today? Now, today, puro ka empowerment versus before, mas, how would I put it? You're more involved before?
I've been very fortunate because of those rules. No? The 2020-60, I've always empowered people, like I said. And I've been fortunate. I have good people that have continues to help us build our business. So that's the most important for me. Did I do anything changes? No. I think what has changed is that we believe today that we have documented all our experiences, and that's the reason why I created a school, just to impart this to those people who are ready to receive it. That's the most challenging, because like a lot of people would want to experience it themselves, right? Goes to these difficulties and the challenges. They think that it's so easy to do these things, but in reality, it's all there, documented. We have now documented a lot of things. We have put a lot of content. It's just that whether they want to receive it or not. It takes a while. It really takes a while, especially in our business talaga. It takes a while.
Regardless of in the stock market or even in business, sometimes we get blindsided by some things that mean, you think you're in control, and then so all of a sudden, boom, you didn't protect yourselves like on the risk on the business. Then all of a sudden, it takes one mistake, then tinamaan ka na, and now you go through a major reset. I mean, these are things that entrepreneurs, business owners, even people involved in the stock market need to understand.
This is the reason why we get listed also is because it's very important you wouldn't do stupid things because
Everybody's watching you.
everybody's watching you. So these are very important, very critical, and this is what we call the when you're doing well, you're automatically your ego goes up, right? And because of that, you will now go to a lot of challenges. Like we were discussing it, right? Most of these companies, when they're having so much cash flow, they decided that investing in Australia, investing in New Zealand, investing in all these companies, because of the cash flow, they will continue to buy brands. And then once crisis comes in, automatically they have to now restructure them. They have to start divesting all the other businesses that they go to. And sometimes I cannot blame listed companies because they wanted to grow, so they automatically do a lot of these things because they have the cash flow, they can have access to easy capital. And then probably at that time, the markets basically has not enough for them to acquire, because it will now take longer to acquire. That's why they have to acquire businesses rather. It's easier, it's faster. But if it's not within their core competence, automatically then there will be a lot of losses, no? Which they will be encountering. Yeah. And we've seen that from a lot of our consumer companies. They've taken over a lot of businesses, and most of them, because their cash flow is so good, most of them has to write it off later on in the last 3 to 5 years.
Or the turnaround time is just a little bit longer for some of these guys, diba?
That's right.
Okay.
Because building a business is so difficult. So if they go to, let's say, go to Indonesia, or go to, let's say, Indonesia is an example, or go to India, it will take a while for them to be able to. It's a different culture, right? You know that those are big markets wherein, and if you're going to acquire their businesses, the businesses there, they're already huge. Also, they're much probably bigger than ours, right?
Okay. I think that's enough time we have for today. Maybe last question or last advice for aspiring entrepreneurs or for companies that want to take their companies public, Chairman?
I really believe that everyone should always have the look at their business and try to list their company. That's very important. Of what we have been discussed is that if you want to take this to the next level, listing is really of priority, because then people will be, you are now accountable not only to yourself or to your family, but to everybody. So that alone will really help you structure and grow on itself, at least organically. Then once you have the cash flow, then you can do a lot of these acquisitions. No? So, but it takes a while. It's not that easy. I mean, it takes a while. But by being, how do you say this? By looking at it from a much longer horizon, I think it will also benefit basically whoever that is going to be your successor. So it's much easier for them also. If let's say private entrepreneurs, it's easier also to be able to divest it eventually, to give it back, to give it to your children for succession issue.
Okay, great advice. Right. Thank you again, Chairman, for this afternoon. Before we head on to the next segment, I'll pass this on to BJ first. Ben?
Okay, thank you.
Thank you.
Okay, thank you very much, Sir Edward, for sharing your experience with us all here and shedding light on what goes on behind the scenes. Okay, hearing firsthand experiences really puts things into perspective. So it really does help us understand the things that need to be done to prepare, and more importantly, it helps us set our expectations. Just like what Sir Edward said, setting our expectations is one of the most important things for us, especially with such a large endeavor such as going public. Okay, so let's give a virtual round of applause for Sir Edward Lee. Okay, now we will have a quick break, maybe 2 minutes. If you guys want to get a drink or go to the washroom or anything you need to do to get ready for our next segment, you may do so right now. Okay, so 2 minutes for that. Just a reminder for all of our participants on the Zoom, you can direct any questions that you have, maybe for Sir Edward or for our speakers, our upcoming speakers. You may direct your questions on the Zoom chat to either me, I am labeled as CloudArch, Benjamin Imperial, or you may also send it to CloudArch Ira Peña. We will try our best to get back to these questions later on in the Q&A segment. So yeah, just get ready for our next segment. And I hope you guys are learning a lot so far in our talk. I'd also like to acknowledge the presence of some representatives from the Philippine Stock Exchange. If you guys want to reach out to them on their website as well, if you have any questions, you may do so. And also for any updates on the Philippine IPO market, you may follow our social media pages, CloudArchVentures. We have our Twitter, our Facebook, and our Instagram. So there we post updates on the latest companies that are looking to go public, some statistics on companies that have gone public, mostly in Asia and most importantly in the Philippines. So yeah, sit tight. Our next segment should begin in a few more minutes. Thank you. Okay. Okay. I hope you guys are back on your seats and ready to learn some more. Okay, now going into our panel session, I'd like to welcome Ms. Lorraine Bello Cinco-Chan, the President, CEO, and Director of Wilcon Depot, the country's premier construction retail store and leader in home improvement. Ms. Lorraine was the only Filipina that landed on the Forbes Asia Emerging 25 list. It is a list that honors stellar businesswomen who are making their mark in the regional enterprises. So a virtual round of applause for her. Welcome, Ms. Lorraine. Next, we have Mr. Alvin Lau, CEO and President of B&L Industries, one of the country's leading manufacturers of specialty ingredients for the food and chemical industry. The company was named one of the most honored companies in Asia, with Mr. Lau's recognition as the best CEO in the Philippines by a New York-based institutional investor. Another round of applause for Mr. Lau. Edmund, the floor is all yours.
Thank you, BJ. I think we're super fortunate for the rest of the program to have two successful leaders, both in their industry, come and share their experience about going public. So without further ado, good afternoon, Lorraine. Good afternoon, Alvin.
Afternoon. Hi.
Alvin, are you there?
Hey, Edmund. Perhaps.
Okay.
Hey,
Tara,
can you hear
let's
me?
start. Yeah, I can hear you loud and clear. You know, my father is I always call him first generation, and you know, all three of us, I'd like to think are all the second generation now. Maybe you guys can share first on how you got involved in the family business. Was it by force or by choice? Ladies first, Lorraine.
It wasn't by force, or at least I was led to believe it wasn't by force. Shortly after college, I actually studied Mandarin. That was my sabbatical years. I went to study Mandarin, and our business was really starting to grow. Although we were quite small then, we only had 3 branches, but my father decided it was time for me to come back and help with the business. So I started very early. I've been with the company for 20 years, almost 20 years. So just a few years after college. So,
What was your first job for Wilcon, if I may ask? I mean, what was asked from you from the very beginning?
Well, you know, when it's your own business, right? You have to kind of do everything that needs to be done. So you don't really get a title. You basically, okay, child of the owner here, do everything that needs to be done. So in the beginning, I was helping out with anything that needed helping out. So I was doing buying. I was going to different countries and doing buying. I was helping with IT. I was helping with processes, banks. So anything really we needed to get done as as a small business.
Alvin, and yourself? I mean, you have a big family.
Oh yeah. We are, so in my family, we have 5 members of the first gen. So that's my dad, my uncles in the business. In the second gen, we have 7, I think 7 or 8 na kami. I can't remember anymore. Lost count. So sobrang dami.
Karami.
Anyway, but it's a good thing because we all get along well. We were not forced to enter the business. We were not even encouraged to enter the business. I guess you could call it reverse psychology. So
Oh.
yeah, it seems to work.
Okay. So I'm not sure a bit who made the decision for both your families to go public. I mean, Alvin, you went in 2012. You were earlier. Lorraine, obviously in 2017. Can you guys share your story about, was it the entire family was on board with that decision? Or was it something that you guys wanted to fight for? Hey, we have to get listed. We have to, I mean, for us to grow that next level, big expansion plans.
Oh, I'll start. One thing I really like about my dad, our founder, is he's very open and curious about, kind of what's there, what we could do further for the business. And so actually a lot of maybe banks, a lot of people, a lot of friends would be like, why don't you list, right? So I think maybe in the audience, maybe a lot of the companies, they ask you, why don't you list? So that was kind of the starting point of it. But honestly, in the beginning, we were not sure. We had kind of the same hesitations that your chairman was mentioning earlier, like, oh, what if we lose control? What if, we want to be, we don't want to say everything that we do to the public, right? So that was really the first thing that we thought about. And it's very true what your chairman said. Sometimes when you're doing well, you become very complacent. So, but really, it came down to us sitting down and do we really want to do this? What do we want to? Why do we want to do this? And to be honest, actually, coincidence that Alvin is here with us. He actually helped influence myself and my family. He was really someone who, shared his experience, very generously shared his time, and helped us understand what it meant to go public. And so a lot of discussions, a lot of topics that we had to cover. And as a family, we had to like shift our mindset a little bit. And then as a family, we decided, okay, I think this is a good idea. So it wasn't really like second generation fighting with the first generation.
Yeah.
It wasn't like that for us.
But it takes a lot of, how do I put it? A lot of open-mindedness, I really believe, right? Especially from your father to think, hey, competition, especially in your field, is very tough. I mean, there's so many competitors in this space, especially in the consumer, with where you guys are positioned in Wilcon, right? So I mean, what did you say, Alvin, that actually convinced Lorraine to make that push, diba?
So for us, what I guess where we came from was the fear of the 3-generation curse. First gen builds it, second grows it, third sells and destroys it. So for us, it was trying to implement best practices to make sure our business survives. Kasi kami second gen, what's the assurance we can, go past the next? So it was really, back then we were thinking implementing best practices. Today, after listing, we realized the big advantage of doing the IPO. One, the more traditional reason why companies do an IPO is to have access to capital. So here in the Philippines, it's relatively easy to borrow money from banks, but you can't borrow forever. And debt is just one way to put money into a company. The other is equity, and you need to balance both. And ironically, being public helps on the debt side as well. What I mean by that is we can get really good borrowing rates from banks. We were also able to do our bond a couple of months ago. At the end of the day, for us, being public as a company, this gives us a lot of options. And if you're a company active in the Philippines where there are so many things that are going on, whether it's COVID or Pinatubo or earthquakes or whatever, you want to have as many options as you have.
I'm sure both of you were very active. I mean, in that process of going public, right? Medyo mahaba yan eh. I mean, it's 2-3 years. I mean, you're going back and forth with your audit, legal, including with the investment banking side. Could you describe that experience or that process? Because for us, it was fantastic. I mean, everybody had to be on board with, hey, let's get our minds ready. We're going public. Was it the same thing for you guys? Lorraine?
You're right. There was a lot of back and forth. And actually, we started preparing 5 years before we listed. But when we were preparing, we weren't really thinking of listing. We were just thinking, what if we wanted to list? So we had actually started thinking about it 5 years before our 2017 listing. And a lot of things had to like change in the way we did things, like we thought of things, right? Like your chairman earlier mentioned, like the housekeeping, the books and all of this, like the processes, the IT and all of that has to be considered, right? Like what if we were public, what if we listed? And so we had a lot of back and forth, you're right, with our auditors, with a lot of compliance, like minimum compliances. And we were looking, hey, what if we were actually listed? What would we need to do? What would we need to beef up? And so that was a really, I wouldn't say it was like a lot of changing and shifting with the organization and with us as a family, that were we thinking that we were going to change ownership? It's something like that. It's like you feel like, is control going to be halved, or is someone else going to be in control of the business? So like a lot of these thoughts were like really in our heads, and really we had to talk to a lot of like legal, audit, friends, and people who knew what it was to go through this. And yeah, so that's really something that I think is an exercise that any company, if you're thinking of doing this, you have to go through.
Alvin?
Yeah, for us, it took us 9 months from the date we decided to IPO DNL until it was listed.
Bilis nyo
So
naman.
ang secret dyan is 12 years before the DNL IPO, we made all our mistakes listing our first company. Yes. None of you guys probably remember this. We had a small powder coating company called Coracoat, which we listed in the year 2000. So the idea was, let's list our smallest company and see how it goes. But the mistake there is, pag sobrang liit ng kumpanya, walang pumapansin, walang broker susuot ng report, walang investors bibili ng shares, and it dominoes from there. But that exercise exposed us to having the audit, legal, getting books in order, and so forth. And what we did is we rolled out all of those best practices across even our companies that were not listed. So by the time we wanted to list DNL, straightforward na. That's why it only took 9 months. But actually, it was because we learned from what we did with our previous listings.
So Alvin, for like all the other subsidiaries that the family has, usually technically malinis na lahat, just in case that, I mean, you guys decided to go public, I mean, it wouldn't be an issue, right? Okay, great. Lorraine, you talked about one thing that I wanted to expound on. This is a big issue actually with all the companies that are approaching us. It's always the same thing. Hey, I don't want to lose control of my business, right? I mean, it's a family owned, you own 100%. And then now you raise that 20, 30, or even 40% for some companies. Now you have new shareholders on board. Did you get used to it? I mean, this added responsibility? I mean, how would you view these sort of things? And what would you advise companies that are going through the same situation?
So when we listed, we actually floated 34%. So that was something of also a discussion, like how big a float should we do? And we were afraid is the word. We were hesitant that maybe, we'd suddenly get someone on the board, like somebody would get a board seat. I think maybe a lot of companies maybe think that way. And our experience has been nobody's actually done that. Nobody's actually like We would talk to fund managers, we would talk to investors, and nobody's actually done that. Like, hey, what if you did this? What if you did that? Like, nakikialam, if I can say Tagalog. Nobody's really like, they basically rely on us. Like, you're the operators, you're the ones who know what's going on there, and you run it. And we just want to ask the numbers. So we just have to present the numbers. And so far since we've listed, we've never had that kind of situation. So far, for all intents and purposes, we still control the business. We still have a say, have basically the majority say of where the business will go, our expansion plans, what we're going to do. And the only time maybe we get some, I don't know, some comments would be, I suppose, governance, for risk. And the latest thing is ESG. So, but on the whole, operationally, it's still our call.
Yeah, and that's good. Actually, I mean, some other aspects about the business that we oversee, especially from family oriented, sometimes you don't think about ESG, you don't think about risk, but it's good that obviously the business is professionalized in that regard. So go to my question in relation to that. Has your management style changed pre-IPO versus post? Meaning, is it, how some companies are dictatorial, ikaw yung last say? I mean, diba? Let's be honest, diba? I mean, this is some worries about some businesses have, right? I want to have that last say versus now we're a little bit more democratic. Now we're a little bit more professionalized. Has that changed? Just curious lang, pre-IPO versus being listed.
Is that for me or Alvin?
For both of you, actually.
Alvin, ikaw naman.
Sige, okay. No, I was copying Rain's answer sana eh.
Okay.
Actually, I would say that being public hasn't really affected our decision-making structure, but I would say it has affected how we think about the business. And what I mean by that, before we were listed, we would do some things that maybe are short-term in nature, or if there's an effect, okay lang, kasi diba, it's our money. But my dad always, he used to tell me the story. So when he plays golf, the guy with the locker next to him would make kamusta about the stock. So he needs, oh shucks, okay. He has to be not just aware of what's going on in the company, but he has to like really act in terms of what's best for the company. So I would say that's the biggest mind shift for us. We're always thinking now about what's the best for the company, not just, and in terms of risk taking, we're not just risking our own money. It's different if you're risking your own money, right? Sometimes you can be a little reckless, but now you're actually, you have other investors there, third parties, mas nakakahiya if something happens. So, and you don't want to make those kind of mistakes. So in that sense, the mindset is different. But I think similar to what Rain said earlier, we don't really have, we don't really see the type of shareholder that makes, demands that are unreasonable. I believe in terms of the Philippines, the investing public has a lot of patience. They're willing to let the management and the majority owners go along and do what they do best. And the shareholders vote with their feet. If they don't like what management is doing, they just sell the shares and buy another company.
So management style, I think it has a lot more to do with the size, because when you're like a smaller entrepreneur, very entrepreneurial type of business, like you have a couple of stores, you can kind of do shortcuts, right? Like you can basically take on many hats. Like you're the person in the warehouse, you're the one purchasing, and you're the one kind of invoicing and setting the prices. But obviously for governance, you can't do that, right? For control, you have audit, you can't be the purchaser and the receiver in the warehouse. So those things change because we need governance. And the fact is, you can't really control 72 stores that way. You can't really like manage 72 stores that way. You have thousands, we have thousands of containers coming in. Our purchasing team is like 50, 60 people. So it's really the need to collaborate more and gain more feedback. Kasi like when you're entrepreneurial, it's your business, it's just kind of like not so big. You make the decisions and then you just pretty much tell everybody what to do. But it's not so scalable. And you need to develop more leaders that can help you think, because there's no way you can think of all the perspectives and all the different contexts in the different Luzon, Visayas, Mindanao, in purchasing and all of this. And that's something that has shifted also with us, because we are growing and we have to be sustainable in
And
the
it
way
becomes the more difficult, I guess, to micromanage people, especially the bigger you are, diba?
yeah, the stress will kill you.
Edmund, can I add one more thing?
Sure.
So being listed, you are forced to implement things like having an audit committee, having a risk committee, complying with ESG, writing a sustainability report, having independent directors, which on the surface looks like a hassle. It looks like, bakit pa, hindi naman kailangan. But, honestly, we find a lot of value with having, the audit committee, risk committee, ESG, and so forth. They do really add value. They give us a lot of information. They help us run the company better. So for all intents and purposes, being public, you do have to undergo a lot of changes. That's definitely true. But I think in terms of the positives, there's definitely a lot more advantages and disadvantages.
Yeah. I mean, one of the advantages, you talked about, obviously you had your maiden bond offering, Alvin. The lowest, I think, in Philippines, if I'm not mistaken, or
the lowest, I think, for corporate, the lowest, I think, for 3 years, and the second lowest for 5 years, I think.
Yeah, something like that, right? I mean, congratulations, obviously.
Lucky, we were lucky. Good timing now.
Well, I wouldn't say also, we're going through a pandemic and they still give you the best price, let's be honest, diba? What about retaining talent? I'm just curious. Was it helpful that you guys are listed? Now it's easier for you to get obviously better people around you, surrounding yourself with better talent.
Okay, I'll go first. Okay. One thing, when we're listed, you can actually use your shares as currency. So if you want to do an acquisition, or if you want to use shares as a way to compensate your employees, you can do that too. One thing we did was when we did our IPO, we allowed our staff, we allowed them to buy shares in the IPO. So they had a direct route. They had access to shares. I forgot how many, but it was depending on your position, there's X number of shares you could buy. And then salary deduction pa. And other than that, we also give shares to certain people, like key staff. You can do that. You can give shares to certain staff if you want to hold on to them, and then you can have it like a 5-year retention. So if they leave within 5 years, they give the shares. There's a lot of flexible things you can do with shares that and then of course the rewards are there, right? If the company does well, the share price goes up, the dividend goes up, they benefit as well. So it kind of brings them in as a real owner of the company, and they share the rewards.
So yes, for our case, talent attraction is actually better for us, because previously, like before we were listed or even earlier, the applicants we would get would be a certain level. And now we see that we have a lot of applicants that actually look at us, comparing us with multinational companies. So we didn't have that before. And so that was something that kind of evolved over the last 2-3 years. So we have more access to, I would say, I guess, more experienced talent. The other side of it is we're also pressured to give benefits and compensation. So that's the other side. Yes. So we have, and it's not just pay, it's like benefits, maybe like with what Alvin was mentioning with shares, but a lot of other things as well, like health insurance, sick leave, that sort of thing. So it's also that flip side of it. So your HR has to be also ready in managing that kind of talent, because that kind of talent that expects to apply to a multinational would also expect kind of the similar benefits to to you, as even if we are a local company, like, okay, we're just talking in peso, right? Like our context is the Philippine context, and our competitors, we have to also be attractive to these kinds of talents, because we are growing and we need to continue to expand and help support the network of expansion. So that's two sides of the coin for us. But overall, I think very good development for us, I think.
I'm sure it's paid off, right? You wouldn't be where you are also today. I mean, obviously you're getting more talent. I mean, you have to pay more, obviously, but look at where you are standing also, diba? All right. Siguro, I mean, just to keep maybe things light, just one question for you guys. Any story that happened or horror story that has happened to you prior to listing or during your IPO? I mean, since you guys were listed, I mean, just to share with you guys, prior to us listing in 2006, we were sued by Citibank because of CitiSec Online. So we had to change our name. So I'm not sure, did you guys encounter any horror stories along the way? Maybe you, Alvin. I mean, you've been here longer, especially with Kemres on code.
Horror stories, not really. So far, the journey, well, of course, it is a little bit more work, I'll be honest. It's not, a bed of roses, but I would say the journey was worth it. The rewards, more than compensate for the disadvantages. Okay, here's one big advantage, which maybe not a lot of people know about. If you own a business in the Philippines and you sell it, whether you sell to someone or pamamana mo sa anak mo, that transfer triggers a tax. It's a taxable event. And you have to pay, I think it's the capital gains tax rate used to be 10%, but I think under Create it went up to, I think, 15 or 20%, I can't remember. So, that could be a fairly big chunk of tax. If you own a listed company, if your company is listed, it's zero capital gains tax. You just basically pay the broker's commission, sales tax of 0.6%. So that's what, maybe 1.5% total. So it's a huge saving. So, I mean, just from that perspective, and BIR, there's probably some people in the government here, so I'll be nice. BIR is very good at making sure that everyone is compliant with all their taxes, which is, that's their job. And that's one aspect, that's a no-brainer, right? If you have something worth a lot of money and you want to transfer it, one way to legally avoid paying that big capital gains tax is if it's listed, then 1.5%.
Yeah.
Lorraine?
We don't really have a horror story, but I guess I could share a little bit of a struggle that we went through. It's recorded, I'll be recorded, but basically, that your FS is only good for 6 months, right? When you apply to list. So it was quite a struggle to comply or to submit all the requirements to beat that deadline, because there's a lot of documentation. And I saw that, CloudArch, you have this like timeline in all of this. So I mean, if you get services that help you advise you for that, I think that would be very helpful and less stressful, because once the 6 months expires, you kind of have to redo it again.
Papanik ka na.
Yeah, medyo nagpanic kami kasi already na, and then biglang, oops, the deadline is up, it's almost here. So that was something that we almost didn't list on the day that we were supposed to list because of that. So it's a bit of a hairy situation.
One issue that we also encountered from some of the clients is that, how do I value myself? Like going to IPO, what type of valuation do you deserve? Obviously, you're relying on your investment banker for that regard. Were you guys happy with your valuation when it regards to the IPO? Just on the IPO price, just curious.
We listed at 505. We wanted to be 5.55, and we hit 40 pesos. So it's
okay na yan, Lorraine.
Siguro in hindsight, kasi ours was a purely domestic offering. So parang in hindsight, although we did know this, if we had listed with foreign investment, I think we would have been able to get, in hindsight,
Yeah,
we would have been able to get
better valuation.
yes, higher valuation. But at the same time, we were thinking kasi foreign coming in would take a big chunk of
Mhm.
the listing, and liquidity might be an issue. Might become an issue because they would invest in a big chunk, and then if they were to sell, that would also be like in one go, and that might depress the price. So I mean, those things we were thinking about. So I think well, I can't really say now. I wish we listed at 40 pesos. I can't really say that. So I think at the time we did a lot of due diligence. We did a lot of regional benchmarking as well. So I think that's a good starting point. So if you as a business, you don't have benchmarking here in the Philippines for your type of business, you could benchmark regionally. So that's what we did. We benchmarked regionally in Asia. And so that's how we kind of got to the valuation that we got to.
Well, on the bright side, I mean, if it was international that was first involved in your business, they probably wouldn't be buying on the board also. And you probably wouldn't have like that excess valuation that you also have today, which is good.
Yeah.
I mean, congratulations on that end. Alvin, any issues on your end for valuation?
So we had international investors at our IPO. And I remember when the share price, so we listed at 4 pesos 30. And when the share price hit 8, I was looking at our shareholder registry, and I think none of the foreign investors who had bought at 4.30 were still there. So, yeah, they're good, maybe, but at the beginning, but maybe they don't stay. They have a goal, right? They want to make money as well. They're not. Everyone's, and they all say they're long-term shareholders, but long-term for them could be like 3 months, 6 months. It's not real long-term.
May chismis ako.
Sige, after this. For us, valuation was a real challenge because it was so hard finding a comparable. There was no one domestically listed, even in the region, even in the US. We could find comparables for parts of our business, but not for the whole. So essentially, we just ended up listing, I think at 10.5 or 11 times PE, which is basically what a manufacturing company would list at. And I think now we're probably trading at 22 or something like that. Pero in hindsight, no regrets, because we would never have really found what the value of the company was unless we went through this exercise. I think, I'll be honest, if we didn't do the IPO, we were not listed today, I would still likely assume our valuation would just be based on 10 times PE or 8 times PE or whatever the market's going on.
I mean, sorry. I mean, ironically, there was the two companies that listed this year, the giant telco and the giant consumer company. I mean, both of them had huge institution coming from the foreigner. They said they were all long-term. 6 months after both share prices gone up, they're all dumping shares also in the market.
Yeah.
Diba?
Yeah, not surprised.
I mean, it's easy to say during the good times, they're there with you, right? But when things turn and they make a money, sometimes they're also out that window.
Yes. Well, we don't blame them. I mean, that's
Of
really
course,
the nature of what they are like. Yeah.
Okay. Both companies have seen huge success. Obviously, DNL, you started 15 billion market cap. Wilcon just over 20 billion during your public, and now you've grown 4 times and 6 times for both of you. Congratulations on that end. I'm sure both of you are very happy, and I'm sure the shareholders are even more happy. What does it feel like for you guys? Is the pressure getting bigger and bigger? The responsibility getting bigger and bigger for both of you? Or you just take every day, bahala na, best foot forward, just do your best na lang?
Of course, the pressure is there. It's a lot of pressure also when, especially investors, they're like, okay, we hit our target. We wanted to be 65 stores when we listed, and then we hit that, and now we want to be 100 stores by 2025. So it looks like we're on track to hit that. So it's really a lot of pressure to just keep on going, and you've got high base every year, and then you just have to keep adding to it. But I think it also motivates me because I'm doing this. We did this for the family business, and at the same time, I feel very passionate about the fact that we help the Philippines in employing a lot of people. So I was just in Dawis, Bohol last week, and we opened our 72nd branch. And really, it's really like such a great feeling that, we've employed 150, 100 people there. And there's also indirect employment, there's also economic activity. So something that kind of really motivates me to just keep going and opening and contributing to the economy. And now we have ESG. We want to contribute to the community. We want to be able to help wherever we are. So I think more than the pressure, I think it's really feeling the motivation to help in the Philippine economy. We're here to stay. We want to help the Philippines, and also that it's for our family, the next generation, for my daughter and her cousins. So that's something that I look to, that motivates me, my why, my purpose, rather than too much on the pressure. But yes, the pressure is there every day.
I think that's an understatement, right? I mean, you're providing huge employment, you're changing other people's lives. I mean, all these things, are very important, I really believe, for any listed company, because that really motivates, pushes you to continue working on. I honestly believe a lot of entrepreneurs don't retire, right? This is a lifetime forever na to, diba? I'm sure both your parents are still going to the office. They say they're retired, but it's still what motivates them every day, because they're still changing lives every single day, diba? All right, Alvin, what about you? What about you and your pressure?
Can we just copy Rain's answer? And then for us, it's very much the same factors. We just try to dwell on the positive side. Pressure can be negative if you let it get to you, but we try to look at it more from, giving us the motivation, giving us, it's essentially something that we look at doing what we can, try to be the best. And, we're not just competing in the Philippines, we also export. We are trying to break out into new markets. So the pressure is actually making us think, okay, what else can we do? Are we just happy just doing what we're doing now, just being in the Philippines, being dominant? Is it good enough, or can we do something else? So it's that something else that we're now asking ourselves more, which is, it's pretty healthy. It's pretty good.
Yeah, and you know what the funny part is? Business goes through volatility. Share price obviously goes through volatility as well. And sometimes people, question or badmouth you for not beating expectations. Sometimes guidance pa lang for you guys, right? You don't even know what type of guidance you're going to provide for the following year. And sometimes they expect you to deliver on what you said kasi sinabi mo na eh. But these things, there's always a cyclicality. Things always come to unknown. Obviously in the pandemic, things happen. Pivoting the business. I'm curious, what was the first thing that you guys did? Was it cutting down costs? Was it trying to find new avenues of revenue? Or what was it for you guys? During March of 2020?
Okay, I'll go first. I think for us, we're always segurista. We're always conservative. So when we did the IPO, we made sure that we would not have people expect too much. So under promise, over deliver. When COVID hit, parang frozen deer in headlights. Parang sobrang, oh shucks, what's going to happen? All our customers were closing down, forced to close. Sales were going down. Now, luckily for us, over 85% of our costs are variable. It means less than 15% of our costs are fixed costs. So that means if our sales go down, our costs go down as well. And I think that's what actually saved us. At the end of the day, we made a lot of decisions, like continuing to pay our employees, even if sales were uncertain. We didn't let anyone go. We kind of thought, oh, baka hindi naman tumatagal, baka after 3 months wala na. Although it did take longer, but thankfully the economy did start coming back. So I think the other thing is, a lot of companies, especially those listed, have been around for, 30, 40, 50 years. We've been through so many crises. I mean, from a health perspective, definitely COVID is devastating. But from an economic perspective, we've had much worse, right? We've had, the Marcos years, the coup d'etats under Cory, Era Estrada, and so on and so forth. Things were a lot worse back then, but we were able to survive. So that's, I guess, one benefit of being a company in the Philippines. You get this resiliency. I know that word's overused, but it's true. Filipino companies are resilient. So we're able to survive.
For Wilcon, we were able to keep our Visayas Mindanao stores open, but however, the lockdown resulted in all our Luzon stores closing, which was, a pretty big chunk of our sales. But the first thing that we had to address was the fear. Our employees were all afraid. They didn't really know what was happening, and I resonate with deer cotton headlights. Talagang we didn't know exactly what was happening, and so what we did was, the very first thing was we had to address the fear. So we decided, okay, we will pay the salaries of our employees. Opposite to Alvin, we have higher fixed costs because we have rental, electricity, all of this. So one of the things we had to do was to ask for rental reprieve for the time that we were closed, because we had totally no sales, and we had to really pivot to, actually we started doing Viber, Messenger. We were doing this because we were not allowed to operate stores at all. So, but we could communicate to our customers so that when times were a little bit better, we could do a little bit of delivery. But it was really a lot of fear and uncertainty that we acted on, giving the salary, giving assurance. We weren't going to furlough. We weren't going to cut hours. We just kept the same people, and we had cash. So we don't have any debt. So we decided, okay, let's wait it out and see what will happen with how the government. Unfortunately, we were able to open up again in mid-May. And so that kind of helped us also with the cash flow, and just try to road it out, like whatever IATF, whatever the health protocols, we implemented alcohol, face shield, face mask, everything, just so we could keep our employees safe and assure them, and then just keep on going one day at a time. So that's what we did.
Thankfully, everything started to reopen now, diba?
Yes, thankfully.
Okay, we have a few minutes left before we open up to the public. I mean, we have a lot of questions coming from the public chat. I just like to talk about something really quick, maybe about succession planning and legacy. The first gen built it from 0 to 100. You guys built it from 100 to 1,000, which is even more difficult. And now the third generation, I don't know how you guys talk about it. I mean, they have to build it from 1,000 to 10,000. How important is succession planning for the family? I mean, do you pressure the next generation to come on board, or you let them find out what they want to do with their lives and then hope and pray they come into the business? I mean, let's be honest. I'm sure my third generation, Alvin, meron na sa'yo diba?
Yeah, we have one member of the third gen that already joined us. For us, I think the style or the approach of the first gen seem to work. Don't force. The last thing we want are people working the business who don't want to be here, who have no motivation, and they're in it for the wrong reasons. I guess that's one thing we had to accept as a family. The separation of ownership and management. You can be the owner, but you don't necessarily need to be the manager. So you look around all the other big companies in the US, whether it's Walmart or Microsoft or, Apple, the owner is not necessarily the manager. You just have to build the structures. You have to, establish communication, establish the infrastructure to make sure that things work, that there's communication across the different levels. But yeah, that's going to be the journey that we undergo next. How to make sure the business can run itself despite or even without the family being there.
Okay, can I just copy paste Alvin? No, because our third gen is still really young. They're all really young, so it's similar to Alvin. It's also a bit of a journey, a learning journey also for us, because we have our family constitution. Of course, it looks nice on paper. We all agreed to it, but the actual variable is what will the third gen want. And I believe, I don't know if they're what's after Gen Z. If they're alpha, I don't know what's the next generation. The kind of world that they have grown up in, it's so connected, it's so hyper connected. They can work anywhere, work from home, and so there's so many opportunities. And really, what me as second generation, us, is like build a business, build an environment where they'd be like, yes, I want to come, I want to join that purpose. I want to join that building the Philippine economy and helping with employment. So that's something that I think the why, the purpose, like, do you want to come in and help with this, rather than forcing them to, no, it's a family business, you own it, we all own it, and you just have to come and join, and here, I'll put up a room for you, you're like this manager. So I don't think that's going to work. And so that's really about pulling influence rather than pushing and forcing.
Parang reverse psychology na, no?
Yeah. So
Persuasion.
cut that out.
Okay.
Cut that out.
Can we welcome back Chairman once again, Sheena? We have some questions from the public.
Hi,
And
Uncle.
Hi, Alvin. Thank you.
Hey, Sir
Thank
Edward.
you.
Of course.
Thanks for having us.
Thank you.
Wow, thank you. Very informative. Very good. Very good. Thank you. Thank you. This is really good for the capital market and for the PSE itself. No? Yeah, that's good. Very good. Congratulations. Great valuations, Lorraine.
Oh, thank you. Hope to keep it up fourth quarter na.
okay,
Alvin,
first
Vela-
question. Or we don't have a lot of time. First question first. I mean, there's a lot of fees related to going IPO. You have to spend so much for audit, for legal, and then you have your investment banking fees. Is listing still worth it? Yes, no? I mean,
Short
Of
answer,
course.
yes. Yeah, it's an
When
IPO
you're-
talk, right? We have to say yes.
Oh, yes, go. In the beginning, yes, it looks like, wow, ang daming fees, it's so many. But then afterwards, you get your valuation, you get your dividend. I mean, you've got all these investors. It's your worth is so much more. So
Yeah, I
think-
agree. Yeah, I'll copy Rain's answer there.
Okay, for the next question, I think this is directed to what Alvin you mentioned a while ago about Chemres. Since the company was small and you mentioned that there wouldn't be so much activity on the stock. So I think the question here is, if that's the case, how would my company grow?
Actually, the problem for Corocode, so that was a precursor to Chemres. Chemres actually didn't do too badly because the biodiesel market was growing fast. And that was in 2006. Corocode in year 2000, the business really wasn't growing. The industry wasn't growing. So malit na siya, pero walang growth. And I think that was the main problem. If your company meets the criteria for main board or even SME listing, and as long as you're in an industry that is showing growth, especially if it's a growing industry in another country like the US, and if you can show that you have the plans for growth, and then you can demonstrate that you are actually growing, then I think you're going to be fine. So it's not just being a small company. That's not really the problem. It's really more, how the industry is and how your prospects are within the industry.
Okay, I think that provides a lot of clarity as to your statement a while ago. All right, so there's a question. I mean, none of you guys had this issue, but the question is for internal shareholders that don't want to list, diba? What advice would you tell them, or what advice can you give? Ayaw maglist eh. Chairman, ikaw na lang mauna.
When you talk about internal, it means your partners.
I assume, let's say your partner or the patriarch doesn't want to list. I mean, what do you tell them to convince them to?
Well, I think if you can afford it, you just buy them out, right?
Yeah.
What valuation?
if you're confident about the prospects of the company, you know, the price you pay to buy them out, it's going to be worth more later, right? So yeah, that will show actually how convicted you are about the value of the company shares. So you're really putting your money where your mouth is.
Yeah. All right, there's another question here. To what extent, I'm not sure if this is related, but to what extent can I maintain the final say or direction of my company with regards to public ownership?
If you have
I
the
think
final
pretty,
say.
yeah, you do. Yeah, hindi
If
naman
you're
nawawala
majority,
yan.
yeah, unless you list
Yes.
like 70% of your company. If you're still majority, like 70%, 60%, then
Yeah,
No,
I
you
think,
look at Apple. Apple, I think the wife of Steve Jobs and the heirs hold, I think maybe like 5% or even less. GE is the same. You look at all these big companies, sobrang liit na what they hold. But the CEO basically, you know, the CEO is there at the pleasure of the board. The board sets direction, the CEO executes. The CEO really, you know, if he doesn't do well, the board fires him basically. In theory, that's how it works. But I think for all intents and purposes, you know, you as the owner, you really get to call the shots. But
I think some of these other questions that were asked, I mean, were pretty much addressed during the video. So I suggest and recommend everybody to rewatch it. I mean, it will be uploaded. Don't worry about it. There's a question about volatility in stock prices. And syempre, the value of the company is affected. I guess his worry is psychologically, does it affect you? If your share price is going down and then expectations are, you know, how people have. Anyone?
okay, I'll take this first. I would say it can get to you if you let it. You know, but at the end of the day, the stock price is just a number. You know, unless you're trading the shares or unless you have margin or you borrowed money to buy the shares, you can just buy the shares, hold it, and then, you know, you ride the bad times and then you benefit from the good times. But in general, no, it should not affect how you are because, you know, think about it this way, whether you're listed or not, your money is in the company, right? And the economy will be up, the economy will be down. And, you know, hopefully your company is making profits. If your company is not making profits, ibang usapan yan. But, you know, if times are bad, profits go down, whether you're listed or not, it's how your company's profitability is. That would probably affect you more than how your share price is doing. That's how I would look at it.
For us, I think like we normally just really focus on the business, like where the business is going, especially if like hard times, right? Like you're not hitting the sales targets and all of that. Like we hyper focus on what's the plan, what's the next step, what's the next 3 months, 6 months. And I think that's something that's important also to communicate to your investors, because that's sentiment, right? Like the stock price, if they sell, they buy, it's really sentiment. So being able to properly communicate, of course, within your organization, what you're going to do, and also with your investors. So something that we really focus on is really the business.
Mhm.
So if it's not doing well, if it's just work on how to turn it around. So your investors will see that, yes, you are doing things and it's working. Hopefully it's working and your share price goes up again.
Okay, I think this is pretty much all the questions we have. Lorraine, Alvin, Chairman, thank you guys so much for your time. Maybe last words of wisdom for any of these companies that plan to go public. Sana okay. Lorraine, ladies first again.
Siguro I'll end with something someone asked me when I was asking if we wanted to list, and they said, what if your competitors had an extra 500 million or a billion or 2 billion and you didn't, right? What would they be able to do with it and you didn't have any? So think about that.
Gusto ko yan ah. I like that. Yun na yung sales pitch ko next time.
Oh.
Alvin, Chairman?
us, okay, so it's scary to enter something that you're unfamiliar with. Change is always, no one likes change, right? But you ask 100 listed companies there, I would say 99 out of 100, or maybe 99.9 out of 100 would say this was a good thing to do. Yes, there's a lot of expenses. Yes, it's a lot of unknowns. There are risks, of course, but the rewards more than make up for all of the costs and so on. So definitely worth considering. At worst case, just prepare for the listing. Do your audit, do your legal, and so on. Get ready. You don't have to list them. You don't have to pull the trigger, right? But get ready. And when the day comes, the physics is back at 9,000 or 12,000 or 20,000. The market's so bullish, you can list the PE of 30. Why not, right? Just go ahead and do it. But get to that point where you are ready. Guess you're still thinking about it. You're not sure. The day you decide you want to do it, it's going to take you, X number of years to do it. Do what we did, right? March of 2012, we decided to list. We did our IPO for DNL 12/12/12, December 12th of 2012.
Mine is very simple. I always share this with most listed company, and I always tell them, just focus on your business. Focus on your business. Make sure that when the storm comes, the volatility comes in, you have enough to be able to sustain it. So focus on the business now, like what Lorraine and Alvin has been sharing. That's the most important. Don't worry about share price. Don't worry about all these things, the competitors. I remember there were so many times that people asked me. I said I don't mind being a far second as long as I know that during difficulties I can sustain the business. Because if you are in a hurry, especially our industry itself, it's very cyclical. And if you're in a hurry, you will really get hurt by expanding a lot of other financial services, wherein sometimes the Philippines is not yet ready because of like I said, the GDP per capita is still $3,500, and we are really doing our best to be able to expand slowly, organically, because if the market is not ready and you're basically very aggressively expanding your business and your services, you will really get hurt. So most of our major competitors who want to come into our industry, that was the same thing as I told them. I've told them that they have to be very careful, because if they believe that coming in is so easy, I mean, it took us 21 years to be where we are today, and we're still facing a lot of challenges, still a lot of struggles in our industry itself. So, but if like what Lorraine was saying, if you have a competitor, and we have a lot of competitors who wants to come into our business, because they have not only 500 to a billion, they have probably 20, 30 billion a year in earnings, and they can always come in, and they have probably the customers base to be able to disrupt the business itself. But like I always tell my people, just focus on the business. If they want to be the number one, we can be a far second, as long as we provide a good service, we provide the right, do what is right, and help our customers do well. And the rest is history, right? Yeah,
Okay.
Thank you.
There you have it. Thank you, Lorraine. Thank you, Alvin. Thank you, Chairman, once again. We really appreciate all your time this afternoon. And with that, I'll give the floor back to BJ for any final comments.
Okay, and that wraps it all up. Again, I would like to thank our partners, COL, EO, Anvil, AIM, Kubo, and Startup Village. And of course, thank you to our speakers for taking the time to come out and share your experience and knowledge with everyone. And of course, lastly, I'd like to thank everyone for coming out to attend this talk. I hope you had a good time learning and listening to them today. Hopefully, we got to show a new perspective on the IPO route. Here's a slide with our contact information if you guys were convinced by our speakers and you guys want to pursue or prepare your companies to go public. And also, you may follow our social media accounts to stay updated on the Philippine IPO developments. And feel free to get in touch with us for anything. We're going to help you, and hopefully we'll get in touch soon. That's it for today. Thank you again to everyone who came out to the Zoom meeting or even to the Facebook live stream. Yep. Thank you, everyone. And I hope you guys had a good time. Hope you have a good evening.
Bye. Thank you.